How's it going, everyone? Welcome back to the channel. In yesterday's Bitcoin update, I was saying that we are actually now anticipating this bounce, but making everyone aware, this bounce can be short term and still roll over. Look, the 100 EMA reacted as support, and if I were to draw some key levels of further support slightly above the pink line, we can see, of course, between 95 and 96.6k, this whole area is support between the 6.5 and the 0.5 fib. We're just going to use those gold lines because in actual fact, the 0.5 is currently resistance, right? As it was coming down into it, it's all support. We had an attempt to lose it. It's all been reclaimed. The lower end 95k is support, but the higher end 96.7k is resistance. In fact, today, guys, we actually formed the bearish cross. So this is a macro bearish signal. We have to see it actually invalidated for the market to continue this relief rally. Yes, I do still believe it's just a relief rally. My bias is going to flip on the break of this key level, 105 and 107k. If I see these two levels broken, I'm more bullish than anyone else here. But right now, I am not until they are broken. This move up could just be to retest the newly formed bearish cross as resistance. We need to now see a break of this exact line I'm about to draw for you guys. We need to see this actually broken today. So we've actually tested it already. Look at where it is. It's on my 0.5 Fibonacci, 96.7k. Very slightly above that point. Even if we did see the breakout, it's actually saying, hold up. Yes, you've broken the dotted yellow line. We actually haven't invalidated the bearish cross. So what do we need to see? We need to see a daily candle close, not only above 96.7, but above 97.8. This is the level that I've actually been talking about over the past few Bitcoin updates. There have been multiple attempts at breaking this 20 EMA. On that Friday, the 7th of Feb, I told you it's going to get rejected and it fell all the way back down. Last Friday, on the 14th of Feb, I told you it's going to get rejected and knock back down. Why? Because it's Friday. Simple as that. It's the end of the week. Why choose the end of the week to pump and attempt a breakout when we know the stock market shuts? And so for that reason, there's low volume on the weekends. It just brings a fake breakout. So it's a trick. It's tricking you into buying, and then it goes stale for the weekend. As you can see, the momentum dies down. That has led to the rollover. Now support has been protected, and that's why we're given this bounce. I warned of this bounce in yesterday's video, suggesting now that it's been tested, I expect a market-wide bounce up until the resistance, and the resistance sits right here, the yellow dotted line, and this newly formed bearish cross. You can see the orange is now over the purple. So to invalidate this, I need to see a break of 96.7, 97.8 with a daily candle close. Until that very moment, this is a false move up, guys. We're going to roll over. If I start seeing those two broken, and it kind of needs to be today, because you can see there's not much room left. It will just get knocked back down. Can you see how there's a line here and a line here? There's an apex, so it's not got a lot of days left to decide a move. It is meant to go up from here. But as I've been warning, the first area of resistance beyond here would be between 99 and 102. Area 1. And then Area 2, 105 and 107. Guys, it can get rejected at any point. It needs to push through this one, and this one, and flip the last one into support for it to be totally safe. Until then, I'm going to be warning everyone on a daily basis. We're not in the clear yet. This range is very similar to what we saw last year. I think it was last year. Let me just double check. Might be 2023, in fact. Yeah, it was 2023. So I think that's quite similar to 2023. And back then, there was a lot of talk of this double top, similar to what we're seeing right now. And I was also on the side of this is a double top until proven otherwise. So the same situation that we see today was happening back here in 2023. The target was down over here. You can see it never actually broke the neckline. So how did we invalidate the bias of being bearish with the double top? There will be a Fibonacci that will tell you when 30k and 31k is broken, this is now bullish. And then you've got more than enough time to catch on to that move. Okay, it's the same situation here. The market is at support. It's meant to bounce. And we've seen a short-term bounce from 93k from yesterday, now sitting at 96k. So it's pumped 3k since my last video update, as I called. The risk is it could pump another 10k. It's still not good enough, right? It needs to break like we saw in 2023. Once broken, it initiates the move up to the targets. I have been saying these are my targets. I haven't once said it's the Bitcoin bear market. I think that Bitcoin is just in a correction, which can still later develop into new lower lows. Guys, we could pump up into here and still go lower than 90k. We can. It's a fact. While under that resistance, we can still go to new lows. Break that resistance. We no longer think about these new lows. Bitcoin comes out of this correction and the market gets this nice bounce on the break of 105 and 107k, as Bitcoin would now be on its way to 115, 120, 130 and 140,000 US dollars. That is it from me today. I'll update you, but please be aware today we formed a bearish cross and it has to break 96.7 and 97.8 today. Yes, that's right. If it does not, then there's even more risk of that rollover since we're coming into the apex of this line of support and this descending resistance. Like, subscribe, comment and share. If you want to get educated, use the links down below to enter the Discord community where I do live streams to teach you guys how to analyze the charts just like me.